Okay, so you've read the title, you've probably seen the thumbnail, and you're like, oh my God, here we go again. There's some more FOMO here. And what I want to share with you is some cold hard facts. And sometimes you just need to be slapped across the head with some cold hard facts. And that's exactly what I'm going to share with you. Because the reality is, if you don't start making moves soon, it's probably going to be out of reach when it comes to owning a home here in Australia. I don't make up the rules, and nor do I drive the market a particular way from my small YouTube channel. So if you guys are interested in what my thoughts are, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now, if you are watching this on YouTube, you can definitely go check it out ad-free on Spotify. It's completely ad-free across both platforms. And I've done that because I want you guys to access all this free education everywhere. So if you're on the go, check it out there. If you're at home, check it out there. And if you want to share it with someone, you can share it wherever you like. Now that's probably the happiest you'll find me in this video because the reality is, it's a very grim reality. And the idea of a fair go in Australia, or the idea of the great Australian dream of owning your own house, it's slipping away. And it's slipping away a lot faster than most people think. Now, yes, you could go out and blame migration. You can go and blame the evil investors. There's so many things that we can do. But I want you to keep an open mind as we go through this video. Because what I want you to focus on is accountability on what you can control. Everything you can control, you should control. Everything outside of that is pretty much white noise. So what I do on a day-to-day basis shouldn't really affect you, and you should go and protect your energy and time and execute with speed. So you need to go and focus what you can do right now to be able to make sure that this doesn't happen to your family. Now, it looks like there's no end to the Australia's rental crisis. Domain has released the September quarter rent report, which contains the below chart showing there's dramatic growth in median asking rents across the combined capital cities. What we can see is the light green, which is houses, and then in the dark green, we've got the combined capitals for units. What we have seen is this rapid increase in rents more recently, and there's a couple of factors that play into that, which I'm going to share in a bit. But what we are seeing is a bit of a tapering off. Now, what most people are hoping for is that this is temporary. And while we think it's temporary, it does mean that rents will stay at an elevated pace. What we could see is a little more leniency around rents and how quickly they've grown if we do start seeing interest rates cut, which is a good thing. Now, a big factor that plays into this is the Australian net overseas migration. And what we can see is this period here between the 1940s and sort of early 2000s, this is normal immigration. This is what we want to see. However, since then, what we did see is higher levels all the way up until 2019, 2020. Then we shut off our borders. And what we do see is the rubber band effect. I've spoken about this when it comes to inflation and interest rates. When you have one thing be so volatile in one direction, chances are you're going to see the opposite effect very quickly. Between 1910 and 1920 is exactly what we saw, where we saw a sharp drop off only to see a big rebound. Now what we're seeing is numbers a lot higher than that. And what we've seen is in 2020, when things got locked down, our borders also locked down. And post that, we've seen the highest numbers of immigration come into Australia. Now what we're seeing is projected to be a lot higher still than normal immigration. Now it's very hard to predict where we're going to end up over the next 20 or 30 years, but it's safe to say that with the appeal from overseas people to come to Australia, I don't see the demand falling off anytime soon. The world's largest commercial real estate group, CBRE, projects that Australia's rental crisis will continue as population demand overruns supply. CBRE projects Australia's population will grow by 3.6 million to 31 million by 2034, from the current 27.4 million. Now, mind you, when you think about the projections experts had for the Australian population in 2024, we've eclipsed those numbers a lot faster. So if we see these numbers, yeah, sure, it's going to be a bad thing. But what are the chances that we see this number a lot sooner than 2034? I think it's highly likely. Now, a big problem when it comes to the rental crisis is that, yes, we have demand, but we have supply going the opposite way, where we have low levels of supply, not just for houses, because that's basically in the toilet. You've also got that for apartment living. Now, before you go jump online and buy an apartment somewhere because you think it's a good investment, just think about what risks you have to take when you go and purchase a unit. Now, I've got a couple of units in my own portfolio, but they're very carefully selected. They're not in a building of 200. They're definitely not in areas where there's multiple towers, and they're definitely properties that are completely unique. And the biggest issue that people have when it comes to investing in units or buying units is, how do you know it's not defected? How do you know there's no problem with it? Because over the last 10 to 15 years, we've seen plenty of issues. because all of these bigger developers are saying, well, it's a churn and burn. Let's build a cardboard cutout of some place and it's going to be literally a cube, and then we're going to sell it for so much more money. And based on affordability, people can only afford these things. And what you can see here is the high-rise apartment approvals. Now, despite so many coming out, we're still seeing this number decline year on year. And that's quite concerning, because if we are in this position now, what does it look like in the next 5 years? What's crazy to see is Western Australia in the grey is pretty much at the lowest levels it's ever been at. And if you see something like New South Wales, where we have the highest levels of approvals, you've seen that decline pretty much from 2016 all the way through to now, and it doesn't look like it's stopping anytime soon. Now, a major reason as to why we still see property prices continue higher and higher and higher is because inflation to a certain extent is baked into the property. Because when you buy a property, right, you're not just buying a house where you can live in. You're going, okay, there's materials that go into this. The bricks, they cost more. The tiles, they cost more. All of the other building materials that you have are costing more over time, because they're all hard assets derived in money, which is basically useless. The currency is absolutely useless. So when you look at a graph like this, what you're seeing is that because the cost of a construction is increasing, you're pretty much thinking about what the replacement cost is of that house. Now, if you think about it and you purchase a property for, say, $500,000, and yes, you can still find these if you're finding it difficult to find investment properties like that, and I'm talking about houses and townhouses in really good locations, then definitely reach out to us at searchproperty.com.au, because we move at speed and a lot faster than most people ever can. Now, if you purchase a property for, say, $500K and you get the land plus the house, you've got to think about how much it would cost to rebuild a house like that. And if you're thinking that a house now is costing $200K, you'd be pretty much out of luck. The cost of building a house is increasing, and that is then putting further pressure onto the existing stock. And that's not just from a capital growth perspective, it's also from a rental growth perspective. Because the higher the cost of a house to construct means that there's less people willing to take that on. And especially when you've got interest rates so high, you don't have as many people going out there, getting an approval, holding a loan for a long time, and then getting approved for a loan as well. To add to this entire mess, you've got company insolvencies pretty much at all-time high when it comes to construction companies. And these could include really small construction companies as well as really large ones. You can simply go out onto Google and search up construction company collapse, and you'll see so many over the last couple of years. It's simply not viable for a lot of these developers to go and build. You've got people that could borrow, say, 24 months ago, but now can't borrow. And unfortunately, that puts pressure onto the stock. And it also puts pressure on these larger companies that have taken out debt, and we've seen increases in interest rates so quickly. Now, lately, we had our Prime Minister get into some hot water when it comes to his house, and he's purchased something for like $4 million. I am not going to go into that discussion, whether I think it's a good idea or it's not a good idea. What I can comment on is one of the worst things that I've seen when it comes to policy making and promises. It was pretty much this, which is the housing target that this government comes out with, saying we're going to build 1.2 million homes. That's pretty much where the target was, which is we need 240,000 every single year. And I pretty much said when they came out with it, I said they're probably going to produce a lot less than what they normally do, versus they're going to go and hit all-time highs. And that's exactly what we've seen, where we see the target being 240 and the numbers that we're producing are closer to 180,000. So every year that we miss that target, it means that we kick the can down the road. Now, what would make sense is if you're not going to get your supply in, you probably shouldn't get your demand in, and your demand being immigration. So maybe just slow things down on that front. But no, you can't do that, because then the Australian economy is going to collapse. We've pretty much experienced a per capita recession already. If we don't have all these people coming into the country, we pretty much will go down the track of having an economy that doesn't have a soft landing at all, and it would be a hard crash. Now, I would go on to say they've managed this quite well. The RBA, the government, they've worked well. However, there is always going to be collateral damage. There are people out there making more money than ever before, but they feel poorer than ever before. And the reality of inflation is that it erodes all debts. And with interest rates probably coming down in the next 6 to 12 months, they've pretty much chosen their path, which is let's go and inflate the economies, let's print more money into the economy. Maybe hyperinflation is the cause of concern, not so much a hard landing over the next 36 to 48 months. Now, as I mentioned, the Australian dream of owning a home or a fair go in Australia is pretty much deteriorating. And in 2023, the Intergenerational Report included the following chart, which shows the collapse in home ownership amongst younger Australians. What we can see is in the blue, you've got 1981, in the red, you've got 2001, and in the purple, you've got 2021. what we've seen is that number pretty much decrease all the way from anyone between 25 and 45, and then it starts shifting a little bit more from there. But overall, it's a lot harder to own a house now than it has been in the past, despite people coming out and saying interest rates were so much higher back then. And this does unfortunately mean that you need to start making moves sooner rather than later. Now, if you choose to take on this advice, and it's free advice, it's not even advice at this point, it's just common sense. If you want to take accountability for your actions, go and use your money, save it, invest in assets, protect your wealth, and continue, rinse and repeat. If you think this is all FOMO and that nobody should be buying a property, then you're most likely going to let me know in the comments down below anyway, but the reality is those comments do nothing for your own bank balance. So that's what I urge you to do, is move with speed, move with the right team. If you need the help, there's always that opportunity to contact the best buyers agency in Australia, which is Search Property. But if you need ongoing help and mentoring, then definitely go and subscribe to this channel. I've got hundreds and hundreds of videos on this channel and I upload every single week. I hope you guys have enjoyed this one. If you have, smash that like button, subscribe if you haven't already, and I'll catch you guys in the next one. Thanks guys.